Welcome to the Nasdaq 100. That is the top 100 stocks like Apple, Google, Priceline, CMG, and so forth. The big high beta movers are in this Nasdaq 100. And Apple is about a little less than 20% weighting of this Nasdaq 100. So when Apple works well, this works well. But let me just update all of my MMTs worldwide. When we had a bull, when we got up here, we rallied so hard and nicely on this NASDAQ 100. It paid a fortune on the calls. And what am I talking about? I'm talking about there are calls and there are puts. Depending on what direction you're going, this is the biggest, NASDAQ 100 is the biggest pair as far as I'm concerned in all of the index options that can be traded. Pay a lot more than the S&P 500 because the NASDAQ 100 moves fast and furious. But let's take a look at the NASDAQ 100. Here's what we have going. When we got to the calendar 2012 high, we had an immediate reversal and we were short the market. We had ran the rally. The bull had ran and it needed a correction. It got the correction out of the Europe deal, and back in June we said it was time to get long. We went up, we made another high. What a big monster trade it was. Now we have a second calendar year reversal in this NASDAQ 100. The earnings season has been horrible. You got Obama and Romney up for election. I will keep it that you want to watch the S&P video because it applies to this too. The same verbiage, the same analysis applies here and to the Dow. That way I don't have to go into great length about it because my MMTs will know that where this resistance was, where that lower bottom was, we got right here to where that rally and that top, and it was a great short. Now, the blue line is a 10-week. I'm 1 week, I'm 2 weeks, 3 weeks below that blue line. That means that we are going from a strong bull into a bear reversal. If there is one more calendar week below the 10-week, and that 10-week is pointing down, that is more of a bear trend. That means that when stocks go up in the NASDAQ 100, they'll hit resistance and sell down. They'll hit resistance and sell down. They'll hit resistance and sell down. That's how it will be. So, what I will tell people, 2,600 down here at the 50-week moving average is key. That's 2590. We haven't been there for a long time. Over here, we had 1 week, 2 weeks, 3 weeks, 4 weeks below the 10-week. The 10-week was declining in value. That is a bear reversal, period. And it's not a bull trend until you get back 4 weeks. You must, in our system, we use everything mathematically. It's not the same as other people because it's not accurate. Ours is. You have to, and the qualifier is the blue line is no longer going down. That's the 10-week. And you have 4 consecutive weeks closing level above the 10-week. The 10-week is rising. That's where the strength is. And that's when the stocks in the NASDAQ 100 will hit support levels and break higher to higher resistance levels and to higher 52-week highs. And that's exactly what happened in this last trend. So let's be specific. Bull started here. Had the reversal. Second bull is called a second right. We had the first reversal and we're in a secondary reversal like we were over here. But this was a lot of Europe and this was all the summer stuff and everyone was left out of the rally. Believe me, they were not in it. Key support level is going to be right here. This is where we broke higher to get to that last high. That's about 2601. That a 50-week moving average is 2590. You got a closing level below the 10-week. This is a 20-week moving average. This will remain the resistance level right there, right across here where that part went up. So, until we get above that 20-week, but you got to get a closing above the 10-week. The 10-week moving average has got to flatten out like it did here before you can say that we're going to rally back up and make all-time highs again. Now, with Obama, if Obama wins, well, hell, we're coming right back here to this 100-week moving average, and that's at 2440. That was a great buy down here at this area. We would come here, we would break below the 50-week, we would come down and we would test that because higher taxes are not good. You're not going to grow the economy. You've got major corporations laying more people off right now. You've got CEOs petitioning Congress and so forth and so on. Go look at the S&P 500 video to get the full analysis because it applies right here too. So basically that's a support level. The 10-week up here on any short-term rallies is going to be right below here. That's going to be 27.67. And what are we looking at doing? Stealing this contract to 27.50 call, which is dirt cheap. You don't believe me? This call, 2750 call, they were $146 a contract up here. They were just recently $62 a contract. We are taking all our risk out because this call contract has never been this deflated. Ever. That means that when we make our transactions, we're the cheapest ones to the risk. If you were buying 10 contracts up here at $40, you're down 30 grand. What we do here in our options pit is that we buy deflated. Remember, it was inflated up here, and look at the massive drop. Bam! Look at the massive drop in value. Look at here. They're not inflated up here. It's a call chart. It's a monthly 2750 call. And the election is what? November 6th? Now, what we look to do is set alarms. The low was $8, and it's never been that low. That means we're going to be taking the risk out of this trade. The other scenario, well, we would be going just the opposite way here. We would go right down here to the 2500 level on this put option. If Obama wins, the puts were cheap. They were deflated here. This price level is $3.45. They got up here to $15 on the puts on this Nasdaq 100. Now, this is well below the market. That's like 250 handles below the market. But you never have to get to 2,500 to make money. But I will tell you that if these pull back and Obama wins, then this is the other side of the trade. That's the bear case, the put side, below the market. Remember, Nasdaq 100 closed at 2665. That's a 2,500. That's like 165 handles below the strike price. But I will tell you that the Nasdaq 100 would sell down to that 2601 very quickly. And these would be way up here again. $25. But we will take a look that in the short term, the way to trade this is to get this as cheap as we can down here. Just like we're going to do on the call side that I showed. So that way we're both sides of the market, and whoever wins the election will make our adjustments and cut one side and let the other one run to glory. And we will. And that's using the Nasdaq 100 call option, put option. Nasdaq 100 analysis is you're below the 10 and the 20 with the 3-week reversal below the 10-week and the 20-week with a major support level right above the 2600 handle. Yes, you can argue the fact that in the very short term, you'll take the low end of that. You can say here's where that breakout was on this weekly bar. This is right around 2636. That's about 30 some handles below the market. That's going to be this lower trend line right here. This is where we're at right here. That's the major support level here. And now if we breach it, then we come down and we start testing other weekly breakout bars in here. And there is where the last part of the base is. That's 2514. That's why we would be looking at the $2,500 put in here with my MMTs. Should it not be a favorable election, these can go skyrocketing higher because we take a look and find out that 2514, yes, it does not have to get in the money to make money on the trade. No. All it has to do is go in that direction and that side of the market goes higher. So we have a major area of resistance of 2776, which is above the 2750 call strike price that we just showed. That's right here, 2750 calls. Yes, sir. Yes, sir. And yes, sir. And misses. They are very, very, very deflated in price. That means when I make my engagement, I've got the lowest risk. No one has that kind of risk entry, dollar capital risk entry, because they don't. They all own them up here, man. They're buried in them. They're losing their ass on these. And they are. And I'm going to buy them cheap like I always do. Depending on what happens, I'd make big money this way. But just right there where that support level is, on the 2500 area, the 2500, that's right here. And Ken Flagg will tell you, here it is. It's cheap. That's the $2,500 put at support level. That's a put chart. That's what this is, MMT, and we make lots of money. This is the biggest payer. No matter what happens, we have a bear reversal to support in the Nasdaq 100. Watch the S&P 500 video to get more language as far as what's going on with worldwide monetary uh, central bankers around the world and all these other things and everything that's tied into this whole move in here.